Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I've been a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Friday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick, and some banks to lead off the morning. We had JP Morgan report earlier. We just had a minute ago Citi and Wells Fargo, so that'll be our lead story of the day. Those banks are moving. We're going to talk about that. We're going to talk about Starbucks and Netflix. And whatever stocks you throw into the chat, we will discuss. Our guest today, Joe Saluzzi, co-founder of Themis Trading, a market structure expert. He'll be on with us at 8:35. Joel, what is doing this morning in the S&Ps? Are we still in the range?
What about our 9 o'clock guest?
Oh, I totally forgot. Tim Melvin.
Okay.
9 o'clock guest. Thank you.
S&Ps are, we talked about this on the pre-market show. I'm using 79.75. March 27th high as my basis for the absolute top of the trading range. That's only 8 points away. Pre-market low 26.52. I got that early in the session. Pre-market high 73.25. First things first, we got to take out Thursday's high at 26.75. Try to buy the SBUX on a pullback here. It's going to be tough. I like to try and get it maybe in the middle 2660 handle. Bitcoin 2-day rally up over 8,000, up $435. Talking futures here at 81.30. Crude hanging out near 67, down 10 cents. High 67.76. Now you probably caught a few people long there because you did have a double top at the 67.50 area. You got through it. Now we're back below it. Gold in the red, $2.80 at $13.39. So gold fills again at $13.50. Silver basically flat at $16.47. Dennis, earnings season is upon us, and so far so good.
Yeah, so far so good, but starting to leak here on Citigroups. They popped it on the initial numbers here and starting to leak a little bit there. Wells still up in JP Morgan, trading up. PNC disappointing. That's your rundown, but we're going to go into those details of those numbers there right now. Spencer, give us hot off the press. Let's go to the Citigroup numbers here right now because they just broke here about 3 minutes ago at the top of the hour. Thoughts on, or first of all, what are the numbers? Right. And then we'll give you our thoughts.
Citi EPS for Q1, $1.68 versus $1.61. Estimate sales of 18.9 versus 18.86 billion dollars. So beat on the top line and beat on the bottom line for Citigroup.
Did they talk trading revenues at all at Citi? Do you see that line broken down there?
Sure. I'm hopping into the release right now, so I haven't quite gotten that far down yet, but that's the headline.
JP Morgan, give us those numbers too. We'll do those two together because JP Morgan's trading revenues were up, right?
Yes, JP Morgan. So I'll give you the EPS and the sales first. 237 versus 228 EPS, sales 27.9 versus $27.63 billion. So again, they beat on both those numbers as well. JP Morgan also said that trading revenue for the quarter rose 13%.
All you need to know is that when the VIX is up at 20 and not 10 anymore, all of your banks and all of your trading firms are going to be more profitable. It's just that the moves are bigger. They're doing the same strategies. They're doing the ARBs, and there's just more inefficiencies to extract. I had my best quarter in probably 5 years. So that's where you are. It's not that I was trading better. I'm still trading the same. It's the fact that the VIX is not at 10 anymore. Was at 20 for a lot of the quarter. So I'm just getting bigger moves on the same strategies. So that's why, when you're in efficiency trading and, you've got, that edge, that's where you're going to be, making more money when the VIX goes higher. So you look at like firms, even like Virtu Financial, not surprising that the stock was up huge last quarter. VIRT, $20 stock in February, now $36 stock. People buying that off a VIX play. Virtu is making more money in this market because we got more volatility. More volatility is better for traders. Investors don't like more volatility, but traders do. So jump over to the charts. Let's go back to Bank of America, JP Morgan, because Joel doesn't want me to go on tangents here today. JP Morgan trading up $1.20 in the pre-market. Citigroup also trading up on their report. Thoughts here from a technical basis. Let's start with JPM.
What about the triple D indicator for bank stocks? Like if you're having a good quarter, then we go into the bank. Yes.
Yeah. Well, at least on the trading side. The one thing though with banks is they have so many revenues from other sources too. So trading is just one component. I mean, Virtu is all trading. So that's why it's no doubt, Virtu is going to have an awesome quarter when they report, but expectations are higher for them as well now. But JP Morgan, let's jump in the technicals.
Okay. Well, I got Citigroup up first.
Overall, Citigroup's a better one because almost going red here now.
Yeah, it's an interesting quick pop here. Yeah, quick pop up here to 73.45. Now, didn't really have any number up there, to be honest with you. 74.27. That if we decide to reverse and go back up north, keep an eye on that. That was a March 21st high. And all I have to say for Citigroup is here, you better stay green on the session here. You're leaking bad here, so I'd keep an eye on the close. And if this starts to go red, I'd be a little bit concerned here from the long side. Yesterday's low, way down at 70.47. So keep an eye on the close on that. And did JP Morgan, you gave those numbers too, right? JP Morgan, that's holding its gains a little bit better. Pre-market high was made ahead of the number at 114.95. So 115 stands as a significant level. We are trading above yesterday's high. So if, in fact, we could take out the pre-market high, you got a lot of air up to 116.63. But just remembering these banks and trade, when actively trading them on earnings, they're going to be all over the place here. So
they are volatile.
Yeah.
Especially they were strong ahead of the earnings yesterday, which we typically see. I like to play it that way, actually buying the banks ahead of the report, the day before, and then selling them before they report. Just because they have the wild card of the report, but there's usually is a run up the day before. We exactly saw that, so that trade was there, and I actually did make some money trading it off of that. Even last night, they were all getting bid up after hours as people, anticipating and wanting to be in those stocks for the report. The reports are good. The reports from all three banks were pretty good, but expectations a little bit higher here too, just in the last couple of days as they've been running up. So, and we knew the trading revenues were going to be up. So. Just concerning, when you see Citigroup, only up 30 cents. But as long as they stay green, that's okay. So we'll keep an eye. It's going to be a lot of pre-market trading here yet before 9:30. You need these stocks to stay green, though. You don't want to see them start leaking. JP Morgan reported, I think, back at 7 o'clock. So they've had more time to digest their reports. That's why it's not as choppy as the Citigroup that just reported 8 minutes ago.
And Wells Fargo also 8 minutes ago. Q1 EPS $1.12 versus $1.07. Sales $21.93 versus $21.75 billion. So again, beats across the board for Wells Fargo.
Stock trading up too. All these things are moving together today. You look at Bank America, didn't even report, and it's moving perfectly with these things too. Some algos just pair trading all these things together here this morning. But Citigroup up, obviously not quite as much. JP Morgan up 1%. But all the banks right now typically trading up 1%. But again, what Joel said, they're going to be choppy here. So keep your eye on the leaders. And I'll say the leader, for today is usually Citi. They all report, but Citi is usually the more volatile one of those three that just reported. So keep your eye on Citi. If Citi goes red, it could drag down the other ones too.
The Wells Fargo got a pop in that headline number to 53.66. Big number, 54, 396. That was your high on April 5th. He had another high at 54.28. That was on March 22nd. So looks kind of sleepy here, just like the market after the sell-off. But the market's come back, and this hasn't. So not getting real excited on the upside until it could clear 54. And the close way down 52.70. I'm sure anybody short that would like to get out at the mark at 52.70. And Bank America, rallying with the rest of them. That's attempting to clear a quad top here at 30.82 to 31. So I'd say as long as it stays above 31 and it's only a nickel above that, you got some room to the upside. 31.49 would be a good target, March 22nd high.
Jump over to PNC because they actually are trading in the red. I didn't read the numbers, Spencer, so maybe you can help me out there.
PNC reporting also this morning, a little smaller regional bank. They reported a Q1 EPS of $2.43, which was in line with the estimate. I actually don't have a revenue number in front of me, but I imagine based on the trading that
in line's not good enough.
No.
Not good enough.
It wasn't a beat.
Especially after last quarter. I mean, PNC isn't a big trader. I don't even know if they have trading operations, regional banking. Maybe they do, maybe they don't. But PNC here down $2 in the pre-market. The one thing is, if you're trading this thing at multiple lows of 146, we're $3 away from there. I think that's the level where it could test if it does go into really sell-off mode, and that's the level where I'd be interested in possibly trying to call bottom.
149. I think you got support ahead of that level. 149 was your low on Wednesday. 891. That was your low on April 9th. So still haven't taken out the real good support. The pre-market low stands at 149 even. So that's a bogey. After that, Dennis mentioned, really opens up to the 146 level. So keep eye. 149 is the number in PNC.
Just in our chat there, we've got Old Trader wants to know about Qualcomm. Yes, there is rumors here about Qualcomm taking private overnight. And if you look QCOM, we've already heard this already, and those rumors were squashed before. So I don't think there's much here. I don't think it's going private. We know that the old chairman wanted to take it private, but I don't think he can get the financing to do it. So every time I see these rumors, it seems like it's just an opportunity to sell. Talking against my buck here because I do have Qualcomm a long-term investment portfolio. I still like it. Sean Udall still likes it. I like Sean Udall's calls. So I'm sticking with Qualcomm in my long-term investment portfolio. But as a trade, seems like every time this thing pops up on rumors, they just get squashed and it comes right back down. So caution to the person who's chasing these on these rumors this morning, trading up $1.40 in the pre-market.
As long as it stays above 66, we were talking about this one with TT Mac yesterday. 56 has been a level of resistance going back to March 28th. So stays above 56, Dennis. I'll take the other side of the coin on this one. I think this has got a lot of room to the upside. You did trade even higher than this in the pre-market trading. If you're looking for a potential target, actually, this was after hours. After hours, we hit 57.70. So that's off $1.10.
So we're already off $1. I think it's going to give it back. And again, I'm not going to make a bet because I'll be betting against my own stock. But it's just every time this thing pops up in these rumors. We saw this happen back, stock up to $62, $63. Jacobs was going to take it private. And then right away, the CNBC squashed it and said, look, he's not going to get the financing for this. Sure, maybe he'd love to do it, but it's not happening. There was rumors last night that he's working on getting the financing. So he's still interested in potentially taking it private. I just don't think he's going to get the financing to do it either.
I can't get out of my head that what did Broadcom want to pay for this company?
$85.
I know.
That's why I was in it. I was like, if they think it's worth 85 and they don't get the thing's at $62, and I get a nice 4% dividend, so I felt like I had some protection there. You know what? It hasn't worked out for me though, because I'm down 7 points on this investment here now. And, not obviously loving it. I was in it for a long time. I wrote it up. It got up to 68 a couple times. You start thinking, hey, maybe it's going to happen. Maybe it's not going to happen. But I was arguing the point, even if it didn't happen, I didn't think it was going to fall much below 60. I was wrong. Obviously, that everything got wrecked too. So it was a victim of a little bit of the overall market there. But I feel like there is value here. I feel like that's why Broadcom wanted it. I feel like that's why Jacobs wants it. I feel like there's value here. And we know I'm a value investor. So this fits my bill. 4% dividend on top of it all. It fits my bill as a value tag.
And we do have some news on Broadcom itself.
Yep, AVGO announced a $12 billion buyback yesterday.
Big pop here for the stock. Well, they had all this money. They were looking to, put it into Qualcomm. So now, if they're not going to do any acquisitions, why not buy back your own stock? So you're seeing a huge pop here in Broadcom this morning. I always like the special dividend if they would do that better than buybacks. It seems like these companies always buy back their stocks at the wrong time. And I like the cash in the hand as opposed to the cash in the company's hand. But anyways, the market is applauding the buyback here this morning. It is trading up 10 points in the pre-market. But if I was a Broadcom shareholder, I'd much rather have a special dividend for the same reason. Remember General Electric? I argued this on. They did the huge buyback of $50 billion or something they did. Well, it was a huge buyback they did back. What year was that? 2 years ago? Huge buyback. They bought back all that stock at $28-30. Now it's at 13.
Yeah.
And I even argued those days, and I was a GE shareholder back then. I was like, I wish they would have paid me a special dividend. Now I really wish that, because here you are, you bought back all this stock near the highs of the move, and it was the wrong move, and now it's at $13. So you would pay out special dividend to shareholders. It would have been obviously cash in my hand. So it was like, it worked out to like $3 worth of buybacks, $3 per share that they could have, because I did the math. I said they could have paid a special dividend of $3. It would have been $3 in my pocket. And now they just basically burned all that money. So sometimes these companies do the buybacks at the worst possible times. GE obviously was one of those. We know IBM back in the day was buying back stock around 190, 200 as well. Seems like they buy back the stocks when, and the reasoning behind that is because when they got a lot of excess cash, it means they've been making a lot of money. So stock's probably been doing really well. So that's why they're like buying high all the time. I'm not a fan of buybacks just for that reason. I like the special dividends better. Most companies don't do it though, because they don't want to give the cash out. They want to just, make it, better here, and keep the money basically within the company by buying back stock. But I like the special dividends better than the buybacks.
What do you think of this Broadcom chart, just from a shorter term perspective? I think I can't feel my Facebook had been dabbling in it a little bit at the 240 area. I mean, I'm kind of torn here because it's up nearly, 10 sticks. Your pre-market high is right at 251.10, but you're really not backing off here. You know what I mean? It's like you've only leaked about $1.50. So
it's a huge buyback. Like, let's put it in perspective. So what's the market cap on Broadcom? Let's go take a look here. Let's go take a look. Broadcom market cap. Spencer, you have it in front of you? I'm grabbing it.
I'm grabbing it with you. Sometimes
it is.
It's
$98 billion. It's $12 billion buyback.
That's
you're
big.
talking like basically, you're buying back basically 12% of the shares. So if you're thinking that, it's a huge buyback, I mean, there's going to be the potential for it to pop. It's not obscene for it to pop 4% on that news when you're going to buy back that much stock. It's a huge buyback. But that, now obviously they're not doing other things with it. Maybe that's a good thing. Maybe they're not going to go just dump this money into Qualcomm or some other investment and overpay for it. They're putting it back in their own company. So I'm not surprised it's trading up. But from my experience, when stocks pop big time on buybacks, it seems like when you look at them a few weeks later, they often do give it back.
It's not
now, Broadcom is cheap too on a multiple basis. This actually fits my bill of a value tech as well, trading with a 2.81% dividend. So I kind of like it from a fundamental perspective. Technically speaking, the stock has resistance all over the place above 250.
Yeah, and 5150 is your pre-market high. Haven't been over 250 since you hit 54.25, and that was on March 27th, and then you leaked bad to close at 44.37. So getting off the mat here. I'd really look out on the downside though. If you take out 248. That was the low just before stocks closed at 8 o'clock, 48.01. So under that, nothing but air below 248 in AVGO. And I don't know why they have that. Why did they get rid of the Broadcom symbol is what I want to know.
I liked it better too. Was it BRCM?
Because they merged with
yeah.
And then I don't know.
They should have kept BRCM. I agree with Joel. I hate it when they change something.
All right, SBUX are just trying here to get to 79.75. That's your March 27th high. Trading at the highs of the pre-market session. 76.75 stands as the current high. 76 even your last print.
Bumping our head up against our resistance again yesterday, and just can't quite get through it. But I mean, this is setting up. It feels like we're up here again. It feels like every dip is getting bought here now. I feel like this market, and did we make a bet? I don't think we ever did, but I feel like this market's going to make new all-time highs in the next 3 months.
I agreed with you. I mean,
you agreed with me. That's why we didn't make a bet.
Yeah, I finally.
Maybe we should. When me and Joel go on the same side of a trade, it's usually bad.
No, I mean, it's just the dynamics of the way the market was setting up. That's, overall, we talked about the support moving up, every time. Remember under 2,600, how many times then you got the support to move up to the 2,630, 2,640 level. And now we'll see what happens at 79.75. Really, the only thing that seems to derail this market, and it happened yesterday, Dennis, and I know you weren't at your computer trading, but, what was it? Bloomberg reported that we were going to there was rumors we were going to strike 8 sites in
Syria.
I'm like, if we're going to attack Syria, are we going to tell them? Like, okay, during the day on the we let it out. I mean, I don't know. We had a big sell off on that, and I was skeptical in the news, and we ended up rebounding. So 77 even at your high, folks. Keep an eye on 79.75.
If we think we're going into, a little war with Syria there, what do you think about the defense stocks and, General Dynamics, NOC, Lockheed Martin? Think there's a play there? Those things, the charts kind of say that there's a little bit of a trade here. I don't know. What do you think about buying these things?
They've been a buy since Trump got elected. I mean,
and if we go and start doing strikes over there, why is that gonna? I think that could, be a good play here again. I think there's a setup here on NOC, especially. I like this. They're kind of in the middle of the range. They pulled back from the highs. They had a nice candle yesterday. I mean, I like all three of these stocks on the charts. What do you think?
I agree. And you know what looks really itchy? Pull up Boeing here. Boom,
that
boom.
looks good too.
Look at all those
over 340, and it'll move with those. I mean, it's not as pure of a defense play, but it moves along with those. Aerospace.
I mean, even
above 340, it'd be in breakout mode again.
Yep.
Boeing would get some love. And you know what I like too is you had that that candle where you really took out the 320 support and went down to 311 that one day, and then we got right back up over it that day. So that shakes people out. And then obviously now it's had a little consolidation since then. Above 340, I think Boeing could see 360 again. I'd jump on the Boeing train here.
Why don't they do like a stock split or something? Make it more fun. Who wants to trade at 300?
Nobody splits anymore. They all take the Warren Buffett approach. Oh, it's cool to have the high stock price. How often you see stocks don't split as like they used to? They always used to go to 100 and they'd split. They go to $80, $100 and they'd split. They don't do it anymore. You don't see it happen very often anymore. You got a lot of stocks that trade significant prices there. Google and Apple and Apple did split. Yes,
Apple did.
Apple did split. It's still $174 here right now, but you don't see the splits like you used to.
Amazon too, as well.
Yeah,
Microsoft has done 9 splits, and it's only been public for 30 years.
Yeah, well, Microsoft is a prone, but I'm saying all these other companies that like Google's, and you don't see. You used to never see $1,000 stock. In my filters that I used to run in 1999, there'd be like 3 stocks over $1,000, and or 3 stocks even over $500. Now there's a whole bunch of them really. Google trades up there obviously, and we got Amazon. It's a cool new thing. Have a high stock price.
Wasn't it? What were the 3 like? Washington
Post? Washington Post, WTM. So WPO I think is a Washington Post. It might even be off the board now.
Yeah.
WTM, White Mountain Insurance. It's still there. WTM. It's $858. Those were 2, and then Burke was always there. The Burke A, which I always was scared to even have on my screen because I thought I might accidentally buy a share. $297,000 a share because we know Warren doesn't believe in stock splits, although he did come up with the Burke.B and he did split the Burke.B, so kind of did something that he says he doesn't usually do, is split stocks. But anyways, no tangents today, Joyce. No tangents.
ALGN, we're getting asking about that, a run up ahead of earnings.
Yeah, that didn't split.
No, Align Tech.
$63.
Yeah, but this is looking ripe here. I mean, I think I have to agree. I'm not sure who put this in the chat, but yes.
Let's stop for a second. We're going on a tangent. Ripe. What doesn't look ripe? Look at these charts we keep looking at. Like everything looks pretty darn good. I mean, look at Apple bumping its head up against 175. I guess a lot of stocks are still at resistance. But man, there's a lot of setups here. Like this stock market looks like it's gearing up to go. We've been talking about the last couple of days gearing up to go, but it still looks like it's some of them have went, but it still looks like it's kind of gearing up to go.
Apple, just I'm bringing that chart up, trading up 85 cents and 174.99, and man, 515 what 75.15 was a high. 75 even was the high from yesterday. So I'm going to keep an eye on Apple here. Nice breakout. Hit this resistance, bunching up, getting a running start here at 175.
Let's jump over to the ratings parade because there's some interesting ones here. And yes, David B talking in the chat. DBX comes out from Nomura. Nomura comes out with a reduced rating, which is basically equivalent to their sell with a price target of $21. So DBX is getting the beats on this last night. I did make a trade off of this last night when that downgrade happened. Obviously covered too soon because the thing has continued to leak here in the pre-markets, down $1.72, down 5%. So DBX not getting the love from Nomura.
Significant volume trading on this too for this.
Oh yeah, 184,000 shares.
Yeah, new IPO. Let's see here. Let's look at your pre-market low. Is it 31.30? Man, you just don't have a lot of reference points in this because of it's just a recent IPO. If the decline continues,
$30.
Yeah, look at
support. I gotta think.
I think the whole 30 handle, Dennis. After the couple days of trading, you had 1, 2, 3, 4, 5, 6 lows in the 30 handle. So I'll just split it. We get down to 30.50 here. I think you may find support off this downgrade.
Citigroup giving me some love from analyst ratings. They are upgrading ALB. I actually put this one in my investment portfolio yesterday. I've been watching it for a long time. FMC and ALB. I've been watching both of them. They're lithium plays. I mean, ALB has a lot of other businesses as well, but it's a huge lithium maker, one of the biggest. And, you know, if you believe in electric cars, it's a way to play it. And I was watching ALB last year, and it just kept climbing. 2017 went to 90, 100, 110, 120, 130, 140. And I was kicking myself because I had been looking at it before. Well, in this recent sell-off in 2018, it's given all of 2017 gains back and came down to 86 bucks. So I've been itching and looking at it for a while to put in my invest portfolio. It's got a forward multiple of about 21. So it's kind of in line with the market, dividend 1.4%. So it's somewhat of a value, a little bit of an expensive value, but I like the lithium style of it. So I put in my invest portfolio yesterday because I kind of looked at the chart and I was like, you know, I think it's kind of gearing up to go. Well, today it gets upgraded actually by Citigroup. So coincidentally, I'm just lucky on that one. They upgraded to buy and the stock is trading up 2.5%. So ALB trading up here, lithium play.
All right, nice move here. And could be breaking out here to the upside. 4 or 5 sleepy days, and now you're breaking out above 94. So if you're looking to buy this on a pullback, 94.09 fills the gap. George Gotch, I believe is how you pronounce his last name in the chat, is asking about Pulse Biosciences. And that had a big old pop in the pre-market, and that is disclosed positive results for the first multi-center study of MPS technology for seborrheic keratosis lesions. And I'm sure I butchered that. I don't like that it's leaking. It traded very light volume up at 25. Now you've come down all the way to the $20 area.
Yeah, you give it back 2/3 of the game.
Yeah, I think I mean, if I'm looking to add to this or try and buy it, I think I'd like to see it come back down near 20. 1966 was the high in yesterday's session.
A couple other ratings that we haven't hit. Netflix is upgraded here again today. These analysts are just ganging up on it now in a good way. Netflix gets upgraded today by Deutsche Bank, 350 price target. I mean, this is when it's in striking distance of an all-time high here, NFLX. I mean, this is, you know, valuation. It's never made sense to me, but from a growth perspective, they're growing, and that's what the market likes right now. And Netflix has still been a leader there. So NFLX trading up $7 in the pre-market. I think this hitting all-time highs here anytime soon.
It's going to have to deal with a double top here at 320 first. I would keep an eye on that area. Actually, it's not 320. You had a pair of highs at 321.03 and 322.90. So that's about a $2 spread there. So I would use 322 even, just if you want a potential target, hanging up near the highs of the pre-market session. So Netflix, nice move here and pretty decent volume. Also with the market moving up 0.49%, that doesn't hurt it either.
Comment from, and going on tangent, comment from my Facebook in the chat says all the moves happen overnight. I completely agree with this statement. And this is why I have kind of, changed my style of trading almost from like an intraday trader, which, if you go back 10 years ago, I only traded intraday. I never held anything overnight. I only traded basically, from 9:30 to 4, I'd sell everything by the end of the day and make sure I was flat. I have changed that style completely here now, and I consider myself almost an overnight trader now, where I see setups and I see stuff that I like, and I'll hold it overnight because those big moves happen overnight. You're exactly right. The big moves seem to happen. Intraday is a lot of chop and stuff, but the moves are cleaner overnight. And I started talking to you about this, Joel, too. You even started trading S&Ps overnight because you feel like the moves are cleaner there as well.
And I mean, that's basically why we started the pre-market show. We just, we're discussing, and a long time ago, going back, I mean, obviously you've taken it to a whole different level, using the spiders and hedging tactics and being a little bit more conservative to me. But I mean, the overnight, I mean, even now, the way I look at the S&Ps and, try and follow them during the night and train them during the night. I mean, it's just, if you're out, if your stop gets hit, you're out. But, we've always talked about the opens. We've always talked about significant levels, and he's right. And a lot of times too, you'll look at like the S&Ps, like we're up 15 right now, right? You'll look at the end of the day, we might trade up to, 2,700. We might trade down to 2,765 or 70. And then you look at the end of the day and it's like, wow, well, the SPUs are right at that 9:30 open. So there's going to be a lot of activity in both directions. But you're right. If you can, hedge yourself and catch the moves, there's a lot that you can do. Chili Trader is giving a shout out to us, and it's not shout out to us because who was in the chat? I think it was in the Google chat. It was Bullish. I don't know if Bullish, if you're around today, in the Google chat. CLDR caught a bid, and it's got that pecky resistance level, Dennis. 1438 was the high on the day that it swooned down. Got the 14,
I liked it too, actually. Yeah. So I know, we had some other users in the chat bringing it up. I liked it because remember I said yesterday, if you rewind the tape, that we had that board member buying stock. And I'm like, it needed a vote of confidence. I said, I think this could see 14 within the next couple of days. That was when it was at 13.35 in the pre-market. It saw 14 yesterday. So I'm kicking myself. I actually had this. I sold it way too soon. Again, that's the scalper blood me. I'm always selling stocks way too soon. But this was good yesterday. Now today is a different story. It's obviously trading up. It's like it has life though, at least now.
TT Mac, FY, Fire Eye, another Sean Udall favorite. One that I had for a while, I just did not hold on to. Great 2-day move, trading up 35 cents here at 1910, probably with the market. I mean, there was a double top here at 1880 level. I see 1872, 1884. The only thing about this one, it seems to struggle at the whole numbers. It takes a while, and I can't really say that about 18, but you had to bump over 17. You came back to 17. 18, it kind of blew away here. So I don't know if it's going to struggle with the $19 level.
No, $20. I think it's going to see 20.
March, if you want to target above 19, you think you're going to continue this run here. In March of 2016, you had a 19.63 high. So keep an eye on that if you want more than potential sellers at 19.
Let's squeeze in one more rating. Starbucks.
Sure.
Starbucks catching its 4th downgrade of the year.
Quietly, those analysts don't like coffee anymore.
Previously been downgraded this year by Bernstein, Mizuho, and Wedbush, all to neutral, and then this morning Cowen and Company to neutral there as well.
It's down. I mean, the stock actually has come back a long ways from the lows. It's 2% dividend here. I've got this, I've never been a real fan of this stock anyways, and I've never owned it in my actually, that's not true. I did own it in my invest portfolio back in the financial crisis. I sold it way too soon. I think that's why I've had a hate on for it ever since. I think I bought it I think I bought this at like $15 or $10 in the financial crisis. Where did it get down to? Yeah, it was like $15, and I ended up selling it at I did good on it. I think I had doubled my money even. I might have sold it at 20, but now you look at it at 60, you're like, why did I sell that at 20?
It got down during the financial crisis to the same amount that you pay for a cup of coffee in there, $3.53.
Holy cow, $3, eh?
Yeah, $3.53. Wow. That was your.
You'll never going to get prices like that ever again in the financial crisis. There was so many stocks that were just trading for absolutely pennies on the dollar because we thought everything was going under, and it could have. I mean, it looked scary for a while.
All right, 8:35, we're going to take a quick break and grab our first guest of the day, Joe Saluzzi, partner and co-founder of Themis Trading. We'll be right back with Joe. All right, welcome back, everyone, to PreMarket Prep. Spencer Israel, Joel Elconin, Dennis Dick on now with Joe Saluzzi. He's a partner and co-founder of Themis Trading. Is also the co-author of the book Broken Markets: How High-Frequency Trading and Predatory Practices on Wall Street Are Destroying Investor Confidence. Joe, how is your Friday the 13th going?
Good morning, gentlemen. Very good, very good. No complaints here. The weather's getting warmer. We're excited about it.
Well, I forgot it was Friday the 13th. How's that bode? What's your institutional traders do on Friday the 13th, Joe? There are they more nervous on Friday the 13th?
I wouldn't even know it was Friday the 13th.
I didn't know either until you just said it.
No, nobody cares about that. Not in the institutional side. No, not that I know of, at least.
Well, what about this Bitcoin pop here yesterday? Because a huge pop yesterday, obviously, this has come significantly down from the 20,000 area there. What are your thoughts here on Bitcoin going forward? And do you have any institutional traders, interested in stuff like this?
Definitely not. I mean, we're not equity. We're equity traders, so we don't trade in Bitcoin. And when it comes to I have no idea what the price of Bitcoin is or where it's going, and I don't think anybody else does either. And when I see these folks on TV, they're more like a snake oil salesman. And if you're going to predict certain numbers, what is your basis for predicting that? Is there any fundamental valuation, or is it the fact that the squiggly line on the chart crossed the other squiggly line? It's ridiculous, right? It's so. I don't know. I'm more concerned about the structure of the Bitcoin market and the other cryptocurrency markets. And I think, regulators are very concerned about it as well. So it's funny because actually I was at a conference this week in Chicago where SEC Chair Jay Clayton was there. And he was talking about cryptocurrencies, and he was talking about how the SEC is not happy. They're concerned about the fraud, particularly in the ICO space. And that is a main concern of his. And that's something that they're going to be watching closely. So I think, sure, the price is going to bounce around, and there's going to be the guys jumping up and down on TV saying you got to get in. FOMO is going to start again, right? There's no doubt about that. But when it comes to actual structure of this market, I still see nothing going forward. I still don't see a real structure or some sort of real regulatory surveillance being built.
I mean, the ICO, thing is obviously a concern. We have so many, out there that could potentially be scams. I mean, people just taking other people's money there. I mean, the buzz has come out of the market to a certain extent. And I think, back in, obviously January when we saw Bitcoin and all these other cryptocurrencies going straight up, there was probably a lot more, enticing for people to do scams. Now that the price come down and people have been burned, they're probably a little more reluctant to jump into these things. But I mean, what's stopping somebody from just, starting some ICO, and then basically they're saying they're starting an ICO and then just running away with the money?
Nothing, right? I mean, that's really fraud, and that's retail fraud, and I think that's where regulators have to really crack down. I mean, you can't exactly like you said, you can't just come out there and say, yeah, here's a piece of my company, but you get nothing for it. It will blow itself up, right? And those are, they're two separate issues here, right? An ICO is a security. There's no doubt about it. A cryptocurrency is not a security. So how do you regulate them? How do you monitor them? They're separate issues. And I think sometimes we kind of put the two together when in fact they're totally separate.
Joe, I just want to pat ourselves on the back, or pat you on the back a little bit. I mean, we did our our special right when the futures were trading. You and Jim Angel, Professor Jim Angel, very, very skeptical. Do you think the futures put a kibosh on it? You know, coming in, anybody that was long used the futures as an arb, or everyone thought the institutions were going to be piling into it. What do you think? You think?
Yeah, I think so. I think there was certainly, coincidence or not, right? It was pretty much the same day that it pretty much peaked there. But yeah, I mean, listen, the pros are always going to try to lay off on the people who are not pros. And when you see something like a derivative market being built like that, a retail investor should be concerned. And that's really what concerns me about this. There are two separate types of people here, right? Market makers who are trading cryptos, who have been out there, who are extremely smart and extremely knowledgeable. Maybe they're mining it as well, who knows? But they're out there helping create these derivatives. And then they've got their friends on the exchanges who are pushing them, and then pushing the regulators like the CFTC to go in there and allow this thing to go in unopposed, which I still don't understand why they allowed a future to be approved in the sense where a spot market is still pretty much unregulated in the Wild West. So I've got a problem there. But I think the pros came in and absolutely laid off their risk, and that's what they do. They do that in every product, and you have to be careful as a retail investor in this. If you're going to play the game, it's basically, I don't want to say gambling, but it's gambling, right? I mean, you have no idea where it's going. Nobody knows. Nobody has any fundamental valuation. Did anybody do a conference call with a Bitcoin executive? No, because there is none, right? You can't fundamentally value this thing. But if you're playing momentum and you're playing a trade, well, I say, good luck and just be careful.
Let's jump over to the equity markets here. SEC's proposed an access fee pilot here. Joe, tell us a little bit about this and give us your thoughts.
Yeah, they've actually renamed it. They're calling it the transaction fee pilot now, which is fine. And basically the way it works is, the stock market is based on the maker-taker system. In other words, when you add liquidity, you get a rebate on most exchanges, and when you take liquidity, you pay an access fee. There are some inverted exchanges where that's flipped the other way. But let's take the regular exchanges. So that's been a problem for many, many years. In fact, you guys mentioned broken markets earlier. Sal and I wrote about this in 2012, and one of our recommendations was to get rid of the maker-taker market. It basically distorts order routing. So in other words, a broker like myself, when I get an order, I have a couple of options. I got many options on what I can do with that order. But one of my options could be to sit on the bid, join the queue, and hope to get a rebate. Another option could be cross the spread, take the stock, and pay the offer and pay the transaction fee on the offer side. Now, for us, that doesn't even come into play. I don't care. I'm agnostic when it comes to fees. I need to do a good job on the trade so I get the next trade from the institutional client. They know, in other words, if you're going to do something like that, they will sense that in your transaction cost analysis. But there are some brokers who don't seem to care about that, and they will just route based on rebates so that they can earn more money, and it's not necessarily good for the client. So the SEC came along and said, finally, after many, many years, and said, this maker-taker model, which has been around since the mid-'90s, which was actually created by a firm called Island, which was one of the original, they were formed out of guys who were SOS bandits. But the maker-taker model is distortive. And let's check this out. Let's try a pilot. So what they did was they created a pilot program, or they proposed a pilot program, it hasn't been approved yet, for 2 years, where they will now not allow rebates. Well, there's 3 buckets. So right now, the maximum access fee that a broker like myself could pay when taking stock is 30 mils, or 0.3 of a penny. So there's 3 buckets. The first bucket says lower that 30 mils to 15 mils, or 15 100ths of a penny. Second bucket is 5 mils. And then the third bucket, which is the most interesting, is they said no more rebates. Okay, so you are not allowed to pay a rebate to add liquidity. This was the most controversial bucket. There's a lot of brokers who didn't want this. There's a lot of exchanges that didn't. The exchanges are up in arms about this. They don't think this is a good idea. We love it. Okay, absolutely love it. SEC nailed it on this thing. It is the right proposal. They created it the right way. And after a year or two, depending on how long they leave it, you'll study the data and see if it worked. And that's why it's called a pilot. So we think, and the main question that they're going to have afterwards is, did it hurt liquidity, and did it increase transaction cost? We'll see what the data says, but we're going to bet that it doesn't hurt liquidity and it won't increase transaction cost. If anything, it's just going to take the distortion away from broker order routing, which is what we're trying to do.
And I agree with you on so much, Joe. All through the years, I've always agreed on a lot of stuff for you. Here, I am torn, and I'll tell you why. Because as a prop trader here, I have a lot of difficulty getting filled on my limit orders. I mean, if you look at our guys, we had 400 guys in our firm back in the year 2006, 2007. We're down to about 120 now. We're down to a lot less because it's been competitive with high frequency trading. It's obviously taken a lot of our strategies and they've sped them up. So they've taken those away from us. The pure arbitrage stuff, that's a lot of our guys who do back in 2000 can't do it anymore. You can't compete with Citadel in the world. But the bigger thing is we just can't get filled on our limit orders as much. So they've taken us away from the market maker game. Like, we can't play market maker anymore, because when I set my limit order out there, it seems like I only get filled when it blows through me. And that's a lot to do with off-exchange trading, where you've got companies that can match your quote. It's quote matching tactics. The one problem with, the access fee pilot, and I wish they would address a little bit of the other payment for order flow, the internalization off-exchange trading issue involved in this, because when I put my order on an inverted exchange, I have a quicker fill. So it allows me to get filled on my limit order just a little bit faster. And I want to get filled. I'm not concerned about rebates. I'll tell you, I'm a net loser in this game. I'm not sitting out there trying to collect rebates. I'm trying to get executions. By posting on some of these inverted exchanges at my limit order, I find I get a little bit quicker fill. And I've talked to other traders and they feel the same thing. So if they're going to take that eventually away from us, I think they're handcuffing me on my limit order a little bit farther. Now, I mean, as a retail trader, they don't even give you those options. So I think it's good for the retail trader out there, because they're just, sending their order and it's the broker doing all the routing. They're always putting them on the exchange. Robert Battaglio, great paper out of Notre Dame, saying, these brokers always route out and set the limit orders down there where they're going to get paid the most. And that's where they get filled last, because, you're obviously going to hit a bid. If you're paying 30 mils, you're not going to hit that bid. You're going to hit the one that you actually get paid to hit. And that's an inverted exchange. So that's why I'm torn a little bit here. I wish they would have taken it a step further. And like you were saying, maybe one step at a time. But I'm concerned that you're handcuffing the market maker on the exchange just a little bit further by not giving them that option to post on the inverted exchange to get the quicker fill.
Right. And I'll try to hopefully help you on this. Hopefully think that some of the things that we think. I think, first of all, they forced you into the inverted exchange. Okay. They did. Right. So we use inverted as well. Okay. Listen, you're essentially paying to jump the queue, right? And people say, what do you mean you're paying to jump the queue? Well, you can never get on top of the queue because of the speed and the order types that the faster traders, we don't call them HFTs, that the HFTs use, will always beat you. If you're not, you're never going to win that game. They will beat you on the queue every single time. And like you said, you're the last one to get filled, and you're going to roll the quote's going to roll on you. Then you're like, what the hell just happened? So how do you beat them? You say, okay, I'll pay for that, and bats now realize that, by the way, and they raise their fee to 18 mils to add liquidity to their exchange, right? If you're taking, rather. So how do you do that? Why are you forced to go to an inverted queue? Who are these guys ahead of you that are posting these bids and offers? Are they real market makers, or are they just looking, they're looking obviously to make the spread on that thing? My theory and our theory is that a lot of those orders are just going in there for the rebate. Okay, as much as they claim they're trying to trade for the spread, they're trading for the rebate on both sides. If you take the rebates away, all those guys ahead of you in the queue are not going to play the game anymore. It's not worth it for them. They don't want to be here anymore. If they disappear, then your order, the real order, as well as other real displayed liquidity, other real orders, which are out there in the dark pools and ATSs of the world, might come back to the quote and say, I have a fair chance now of getting filled. That's the theory here. In other words, let's get a level playing field with all sorts of orders, all diverse orders in the limit order book. That's the best book you can have, by the way. Multiple types of orders in a limit order displayed book. So will that get your order a better fill? I don't know. I hope it does, but that's why it's a pilot, and that's why there's 3 different buckets in this, so they can test it and see, okay, did the no rebate work? Did the 15 mil access fee work? Did market forces come about and change the access fees on their own? And there's a lot of good questions here, but by doing nothing, the SEC, they can't do nothing anymore. For 20 years, this model crew was created and again, we trade all the time for institutional investors. This, to us, is one of the biggest detriments to the market. It's how brokers are conflicted, and people will say this, by the way. And one of the arguments that you're going to hear against guys like me, they're going to say, well, if you don't like it, Joe, if the institution doesn't like the way you're routing, they should just fire you. In other words, if you're posting bids trying to collect rebates and not taking offers because you don't want to pay the access fee, that's going to show up in your TCA analysis, and then the institution should fire you. And they're right. If you have a bad guy, if you have a broker who's filling you like that, they should fire him. Unfortunately, the way it works is some institutions need to trade with certain brokers for there's payments, there's research, and that's the whole Wall Street model. It's not as easy as it sounds. So rather than blame the victim, right, let's fix the system. That's all we've been saying for years. And the reason why we call it broken markets is because there are broken pieces of the system. And this is one of the fundamental flaws. And I think if you go into this pilot, your order, Dennis, will actually have a better chance of getting filled without having to play the inverted games anymore.
Yeah, I hope you're right, Joe. And obviously you're talking about the toxicity of the market, and completely agree with you on that, is that you just don't have, institutions are going to the dark, they're going everywhere else that they can. And not only that, retail doesn't even get to the lit market anymore. I don't think a lot of people realize that, but majority of your retail orders, at least the marketable flow, just goes right, to an off-exchange market maker. It doesn't even get to the lit market anymore. So market makers that are sitting on the exchange will watch, their price trade again and again and again, and they watch the quote matchers taking their fills, and it gets frustrating as a displayed market maker. So, as a defense, really what most of our traders have done is they move from market makers to market takers. And that's why, we kind of like the inverted quotes there as well, because when we're taking a market, we get paid to take as opposed to paying to take.
Mm-hmm. But you got to be careful too, because obviously signaling goes on, and you need to be careful. You can't just always be trading on an inverted, because you would be tipping your hand. So
it scares the market away. Like when I post, it's funny how finicky this market is. If you're on like a smaller cap stock, you're not going to scare the market on Bank America. But once you get outside the top 100 components, you post on an inverted exchange, it's like, whoa, somebody's, it pushes the whole price away from you.
That's right. And they may assume you're a bigger person. They may think you're larger. And that's where the signaling comes into play. And that's the stuff that shouldn't be in the market, right? So I think the model that we like, and I always talk about this with you guys, is the IEX model, which is a flat fee structure. It is 9 mils on the dark side, 9 mils to post, 9 mils to take. Okay, in other words, 9/100ths of a penny. You pay if you make, you pay if you take. An exchange deserves to be compensated for the ability to help match buyers and sellers. Absolutely, they should get paid. The IEX model actually earns them 18 mils per share when they trade something not lit, or in other words, dark on the hidden market. 18 mils per share they make on every trade. The regular stock exchange model only captures about 4 or 5 mils, because they have to pay a rebate and pay an access fee. So why wouldn't the exchanges want to give themselves a 5 times or 4 to 5 times raise and go to a flat fee structure? It baffles me, unless that they think that they're earning more volume because they're getting this HFC volume coming through trying to collect a rebate. So you see, there are different ways of looking at this. If everybody went flat fee structure, it would be a much fairer market, and I think your orders would have a much better chance of getting filled.
Joe, I'm going to slide one quick question here. TT Mac is asking about options ever trading with the pre-market and after hours. I don't see that happening until stocks are trading 24 hours. Do you see that something on the horizon, or not going to happen?
We don't trade options ourselves, but the stocks do trade pre-opening and post-close. I mean, they open up at 4 a.m. and close around 8 p.m. on the electronic markets. The problem is that the liquidity is really thin unless there's a news item out there. Okay. So, are you going to trade a derivative based off an extremely thin market? I like that the Ameritrade, I think it was, we were going 24/7 or 24/5, whatever they're calling it. I think it's crazy, because a lot of these markets are so thin, and you're only going to have market makers in there making something that it's going to be profitable for them. So,
they just make a wider spread. I mean, I'd love to trade 24-hour markets too, because if you got the S&P futures, hey, I'll go 10 cents wide on the spread buy all day long for you, and just pocket 10 cents every time.
You can do it now, right? You can on some of those.
Market maker for TD Ameritrade.
Joe Saluzzi, partner and co-founder of Themis Trading, joining us here on Benzinga's Pre-Market Prep. Joe, great chat as always. We'll get you on again soon.
You got it, guys. Thanks. Have a good weekend. Thank you.
S&P's hit my target there of 2679.75. That was your high on March 27th. We did take 2680, but man, we still not really backing off. So we'll see what happens when more liquidity comes into the markets. Dennis, did we get all of our ratings done and our start of earnings? Spencer, what do we need to finish up with?
Well, we got the big ratings. Can we do some imbalances? Do we have any of those this morning?
Oh yeah, there's a lot actually. It's all to the buy side, so not surprising. S&Ps continue to go up in the last 24 minutes. Buy balances across the board. Heavy buying balances. Bank of America 451,000 to buy. JP Morgan 146,000 to buy. Citigroup 87,000 to buy. Obviously, that's just on the piggybacks of all the good bank earnings here we've got this morning. But even going into other sectors here, I see General Electric 235,000 to buy here this morning. I see just jumping over Alibaba's 43,000 to buy. Square's 26,000 to buy. Pfizer, Berkshire Hathaway 40,000 to buy and 50,000 to buy respectively. Disney's got a buy imbalance. I mean, I'm not seeing really hardly any sell imbalances. So they're not huge. ExxonMobil 118,000 to buy. That's a no too. But they're almost all buy imbalances today. So seeing buy imbalances across the board this morning.
And Citigroup rebounding here. I'm not sure what time we were talking about it. It was leaking. It almost got unchanged. Yesterday's close was 72.13. And then when we were leaking just off the number, couldn't quite get there. When we started the show, we were looking maybe for support at the close, but other people were thinking of that as well. What hit 72.31 and now rebounding back up near the highs of the pre-market session. That just made a new high at 73.47 in Citigroup. Dennis, someone saying, what was the GE imbalance?
300 just went up 353,000 to buy here now, so that's significant. You know what? When I see a buy and bounce that big, I usually like to look at the book. So, because sometimes these orders will show up in the book if they're not a marketable order, it could just be a big limit order. And yes, I do see somebody's bid for 100,000 to 1384. Obviously, that's a marketable limit. We call that because they know they're getting filled on the opening print. They just put it high enough to make sure that they're getting the opening print because it's not opening up at 1384. I'm just looking how thick the book is.
Or they put it in, maybe they meant 1284.
Well, you see that happen sometimes, Joel. You know, that can, handleitis there. You used to get handleitis every once in a while, didn't you, Joel? You quoting around?
Well,
no, but sometimes you do see that happen, and it will show up, obviously, as an imbalance. If they meant to put 1284, that wouldn't even show up as part of the buy and bounce. They put 1384, it'll show up as 100,000 share buy and bounce, and then it might go just, oops, I didn't mean to do that. I put the wrong handle. So, that's something to be aware of, obviously, when you're trading on this information in the pre-market, is that 100,000 share order just cancels. That's probably one institution just putting that out there and says, oops, I put 1284. Well, that buy and balance will fall from 353 to 253, just like that. Now, if I'm talking GE, I see the book thicken up. So it thickens up from 1340 to 1350. What that means is it's going to struggle to get through that area. 1340, 50,000 to sell. 1345, 50,000 to sell. 1349, 20,000 to sell. 1350, 130,000 to sell. So the book thickens up from 1340 to 1350. I always like to see where it thickens up because it's all about the path of least resistance. And stocks have trouble going through areas that have a lot of order flow in there because it takes big money to push it through that area. So I see it. It's got kind of easy going until it hits 1340, and then it starts to thicken up.
Do you think that 13 on Friday the 13th is finally going to be the magical level in General Electric? I'm looking here.
It's showing life.
9 out of the last 10 highs. Or lows, excuse me, have been between 1279 and 1297, and the outlier at 1317. So whether or not this is just holding on for another drop down to 12 or not, but big buyers stepping up at 13. Rob Hood is asking, are book levels similar to the price by volume indicator? And I would say no. Dennis, you want to answer that one?
What's I gotta read the question again. What's it say? Is the book levels similar to the price by volume indicator? Not sure what you mean by price by volume indicator. So
yeah, the book is just displayed orders that are out there, people that are willing to, buy and sell at specific prices. I think the volume indicator, maybe something like a VWAP, that's showing how much volume actually traded at a particular price.
At a price that got filled. I think that's what right. That's the difference.
I can't feel my Facebook. When is it safe to assume the previous range in the SPY is broken? It is never safe.
It's getting real close now. It's never safe to assume anything.
Yeah. I mean, I think today a close over this area right here would make me a little bit more comfortable. There's a lot of air above here. I'm just talking in the S&P futures. When we came down hard off the 28, I remember we had a couple lows at 28.12. I was talking to you about, Dennis, and let me see where it corresponded in the spiders. I think it corresponded in the spiders to 270. So there is some air above here, but I'd like to see close above the current levels we're trading at. All right, Dennis, we got Tim Melvin coming up at 9. I know you're busy, but
I always listen to Tim though, and if you want to know about those smaller bank stocks, he's always got some diamonds in the rough, and he combs through the rough to find those diamonds. So I love it when he gives us a couple stock picks. So get a couple good ones out of him. I bought some Tim Melvin stocks before and done very well with them. Love it. Big fan of Tim Melvin.
All right, we'll be right back in a second with Tim Melvin.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick, Spencer Israel working the boards, and we are joined live in video here by Tim Melvin. He's a MarketFi maven and the author of the Tim Melvin Deep Value Letter. Tim, how you doing today?
Doing fantastic, Joel. How are you guys?
Yeah, you got baseball season starting, and how your Orioles doing?
We go as far as our pitching and Buck Showalter take us. In our division, the best we get is probably third.
Okay.
It's just going to be a tough year.
So we have you on to talk bank stocks, and we're not going to talk about any of the big banks because I know you don't follow them as close as you do as the smaller banks, but just overall general comments, pretty good earnings for some of these bigger banks coming off some volatile trading revenues up. How much you think this is like predicated on the, maybe getting more interest rates bumps this year than, what is it? 3 versus 4, 4 versus 3. How much you think is attributed to that?
Clearly, the higher interest rates helped all three of the banks that reported this morning. Everybody commented on it in their earnings release, and I'm sure there'll be more on the conference calls later today. A higher interest rate leads to a higher net interest margin. That's fantastic news for the banks. A stronger economy, more loan demand. So it's a pretty good environment for the banks for the rest of the year, unless somebody does something stupid.
Okay, which can always happen.
They are bankers.
Okay. Just real quick, DC1, thoughts on Ozark Bank, OZRK. They had some earnings yesterday.
Bank of the Ozarks, they've grown by acquisition. They've been one of the fastest growing banks out there. Their stock's done pretty well over time, but they do have a large C&I portfolio that's expanded very rapidly, commercial and industrial lending. I've got a feeling they eventually run into problems with that portfolio because I think they grew it too quickly. So that's a stock, it's at 3 times book value, so that's not going to get me interested. But I think they're eventually going to run into some credit problems.
Chart looks a little weak. Literally looks like it needs a clear 49. When do you get interested in the price to book, the book value? Is it under book value? Significantly?
It's under book value, or sometimes in an environment like today, we'll pay book value for what we think is a quality franchise or a high probability takeover candidate. But we're not going to pay much over book.
Is there many things out there, Tim? I know you scan the radars for these stocks, and we had a significant sell-off in the market. Was there enough in the sell-off in the banking, the small banking sector to attract your interest?
Well, let's address the significant sell-off first, because no, we didn't have a significant sell-off. At the peak of that, we were about 8% off of all-time highs, okay? The market's still at 25 times earnings. A significant sell-off looks like 2008, where in that background behind you, we'd see some guys throwing up in the garbage can under their desk and thinking about jumping out the window. That's a significant sell-off. This was a little blip. And did it create any bargains in banks? No, it did not. We've got 20 stocks on our buy list. We've been as low as 15, as high as 22 this year. So no, it was not a significant buying opportunity. I'm very hopeful that sometime soon, somebody, either in banking, investment banking, or politics, does something incredibly stupid so we get a significant sell-off, because I do have some cash I'd like to spend.
Okay. And I mean, here's the thing. It seems like you've had those kind of events, over the last, I don't know, February and March and stuff, but they're so quick, the lows of the February lows, that happened quickly. You get a lot of movement in the overnight action. I mean, what do you like to base it like on the close where you get these interest? Are you trying to throw out lowball bids, or is everything just so far away that it's just, not even worth putting the orders out?
Ever since the flash crash several years ago, I've always kept a couple lowball bids for stuff I'd really like to own at stupid prices in the market, but we haven't even come close to it. And, and buy the dip has worked wonderfully, but as you know, I'm not really a trader. We stick to the rules that we developed over the last 30 years. They've worked incredibly well for us. So we'll just be patient and stay with what we got. Okay.
All right. So let's go to the chat here. And Old Trader is asking thoughts on PACW, Pac West Bancorp. This may be a little bit too thick a volume for you, Tim. It traded 615,000 shares yesterday, but any thoughts on PACW?
We know the bank. We've been familiar with it. Several of our banks have been taken over by them. It is a fantastic bank. It's too pricey for us to be involved, obviously. But management's done a solid job. They're growing a nice franchise out there. If I owned it, I sure would not run to sell it. But I'm not in any hurry to buy it here either.
Let's talk regional banks. And it seems like a faint memory that, we had, the disasters in Hurricane in Houston and in Florida. Any banks there that, you thought might get cheap off those disasters with their exposure to loans and whatnot? Anything develop in those regions?
I had bids in for most of the banks in Texas because I really want to own Texas. It's a fantastic economy. The banking industry there is doing very well. But in the last 5 years, we've only been able to buy one Texas bank. And no, they didn't sell off enough because all those homes that were damaged for the banks, they got paid by the insurance companies for the most part, and then they got to make new construction loans. So it really didn't hurt them. And we've owned every bank in Florida for 5 years now, just because Florida is always first in a takeover boom. So about 5 years ago, we sent a note out to subscribers that says we don't care what the price is, what the valuation is. If it's in Florida, buy it. That has that's worked well.
What are some of those banks that you would consider Florida banks? Give us
Bank United clearly is a Florida bank. Seacoast is a Florida bank. There's not many left, and most of the ones we still have are tiny, 10, 20 million in market cap. So we're not going to talk about those. But if you're playing along at home, just search for banks in Florida. If they're public, buy them. They're probably going to get taken over this year.
How about our great state of Michigan here? The economy turning around everywhere. Detroit just building on the hustle here. I know we've talked about Monroe Bank and Trust a while ago. I know you bought it and sold that successfully. Any comments on any of the Michigan banks?
We did real well in Michigan, but I don't have anything left up there at the moment. We own 4 or 5, but they've all been taken over. The economy obviously is doing very well. I think if I owned Michigan banks, again, I would not be rushing to sell them, but we don't see anything cheap enough to buy there right now either.
All right. Out of the chat here, we got 2 more to go with you. MCB. Any thoughts on that?
MCB?
Yeah, it's Metro Bank Holding Corp.
Let me just get it on this because it's not small enough, as you know, to really hit my radar screen in a strong way.
Yeah, Metro Bank.
I mean, this is 366 million in market cap. I mean, that's huge.
Okay, all right. And And you mentioned the Florida Banks Sun Trust. Pretty good comments on that. That looks like a breakout over 70. So, all right. So we've covered all the regions. Are there any areas of concern, like somewhere like Illinois or California, where you'd be a little bit more cautious on the banks in those areas?
No, because we're really not seeing the problems creep down to the local banks that we deal with. Mm-hmm. The problems, for instance, in California at the government and the state level are not showing up in the bank credit accounts. Not in Illinois either. And Illinois has been just a hotbed of takeover activity. So, and that's going to continue. Illinois has a lot of banks.
All right. LOB, Live Oak Bank shares. Is that something is that a stock you take a look at? It looks like it's trying to break out here over 29.50. Familiar with that one? LOB, that's a pretty good symbol.
Familiar with the bank. It is an incredibly well-run bank. They're doing some very unique things with their loan portfolio. Again, it's too expensive for us to get involved. Joe, we've been doing these calls for years. You know me. I've got the rules and I like it.
I respect that there. I mean, you're not throwing out recommendations for the sake of recommendations. All right. So we've covered the unimportant stuff, and now we have to address a very important topic coming up here the first weekend in May.
Really don't have any Derby predictions yet. Sitting back, waiting for the last couple of qualifying races. That's my birthday weekend. They throw that beautiful horse race for me there in Louisville every year. But it looks like a tough field this year. It's shaping up as a very interesting field.
Did you catch that Florida Derby winner at all? Audible, won by 3 lengths going away. You should take a look at that race because the only big prep this week's the Arkansas Derby. They ran the other ones last week. But anyways, we will get you on again soon. Thanks for being candid here about what stocks you're looking at and what ones you're not. Tim Melvin, MarketFi Maven, and the author of the Tim Melvin Deep Value Letter. Tim, thanks. Go get some sunscreen on, and we'll talk to you again soon.
Okay, thanks a lot.
Okay, Spencer, SBUX, we hit 2680. We backed off only a point, 20 minutes to the open. We'll see what we do at that pre-market high, 2680. You want to wrap things up and preview?
Yeah, sure.
Tomorrow.
Not tomorrow. Tomorrow will be Saturday, so you can come here if you want. I will not be here. Looking ahead at next week's shows, we've got next week is 420, so we're going to have a special marijuana themed or focus, at least on Friday's show. We'll have Alan Brockstein on. We'll have a couple of marijuana focused guests on the show on Friday. Gary Kaltbaum will join us on a Wednesday's show. So a good slate of guests to look forward to next week. If you want to catch any part of today's show again, including our chats with Joe or Tim just now, you can do so on our podcast on iTunes, SoundCloud, and Stitcher. Thanks to everyone in our chats on YouTube and at premarket.benzinga.com. Hope you've all had a nice morning so far. It is Friday, so just a couple more hours, and we're almost at the weekend. But have a good day, folks. Have a good weekend. We will be back with you bright and early on Monday.